Good morning, everyone, and thank you for joining us on Morning Markets on Tuesday, the 28th of November. Today, we'll just look at the relatively sanguine markets yesterday, the reopening of the US, and some comments from Andrew Bailey. Overall, asset markets yesterday, I think we could describe them as relatively sanguine. As you'll see in the ticker, not a lot of change in terms of how overall asset markets performed yesterday. The US market, it reopened after its long weekend of closure for the Thanksgiving holiday. I think what we can take from that is really that retail and Thanksgiving sales activity was relatively robust, so continuing to indicate that the US consumer is still holding in and willing to spend money. Slight contrast to that with new home sales in the US yesterday, which were slightly weaker than expected. And again, just taking a number of these factors together is bringing more to that narrative that the US economy is gradually slowing down as those large and significant changes in interest rates start to take effect. I think then yesterday also one of the more notable discussion points really came from Andrew Bailey. He was here in the northeast in Newcastle yesterday, visiting a number of businesses and giving a few interviews. And I just wanted to bring to life a couple of the points that he was making, because it really relates quite closely to some points that we've been discussing as a team over recent weeks. Firstly, on the interest rate trajectory for the UK, he was certainly very much pushing back on an expectation that we could see interest rate cuts in the very near term, and basically saying it's too soon to be having that discussion. And that's driven by the fact that inflation still remains high relative to central bank targets. So remember, targets are around 2%, and we're at 4% today. So he's really highlighting that the bank is very much focused on returning inflation to that 2% level. I think the other point that was worth noting was really how growth is being described. We as a team have talked about the economic backdrop and the economic delivered statistics from the UK as being relatively disappointing, very low growth and actually at times no growth. And Andrew Bailey did discuss this real challenge for the UK economy, and saying that when he looks at potential growth rates in the economy, that he doubts it's been lower in much of his working life. And that's really a very strong indictment of that growth backdrop that we've got here. That disappointing growth potential, however, and long-term growth, productivity that goes with it, has been a challenge for the economy for a number of years. And politicians have sought to address it. But really, what is the thing that allows it to be addressed more specifically is a long-term plan of action for economic growth and productivity growth, something that's not really conducive with very short election cycles. But certainly that's a much bigger topic and beyond morning markets. Similar vein, we heard from President Lagarde from the ECB, again pushing back on the context of interest rate cuts as soon as people have been expecting. In FX markets then, that did feed through into stronger sterling and stronger euro yesterday. I'll leave it there for today, but please do join us again tomorrow. Many thanks.